Hi there, my name is Krystle Patrick. I'm a real estate agent here in Maryland with Realty, and welcome to my channel. On this channel, we talk about all things home ownership, and we're in the third week of talking about home ownership and the process that it takes, the step-by-step guide. Last week, we spoke about knowing your why. Why do you want to buy a home? And it's crucial because it helps keep you grounded in the home buying process from beginning to end. This week, we're going to talk about credit. Very important topic, very crucial topic in home buying. In this video, we're going to talk about how credit impacts your loan approval and your interest rate. We're also going to briefly mention some popular loans that are available, as well as where you can go find your credit score for free. And then lastly, we'll talk about some actionable steps that you can take to improve your credit score before applying for a mortgage loan. So why does credit matter? Well, it matters because this is what lenders use to determine how worthy are you to receive a loan. How risky are you? Are you going to pay off this loan on time? Are you going to be a problem for them later on? So this is why credit is important. Your credit score influences whether you're approved or not. It also influences how much your interest rate will be and the type of loan programs you might be eligible for. So even with a difference of a credit score of about 20, 40 points, just an example, can actually significantly determine how much money you're going to spend over the life of that loan. So for example, if someone has a credit score of about 740, and then another person has a credit score of about 620, the person with the higher credit score may be eligible for a more favorable interest rate than someone with the lower credit score. So that is why credit score matters. It saves you money, thousands of dollars for the life of the loan. So a higher credit score can actually equal more options, better terms, and lower overall cost of the loan. So there are many options when it comes to different loan types and their credit score requirements. I'm briefly going to mention the popular ones, but I really want to encourage you and empower you to take the information that I mentioned today and do your own research. Learn about the different programs that are available. Learn where you fit in. Talk to a lender. Let them give you the best advice based on your numbers, based on your goals. So first, we're going to talk about the FHA loan. It's the Federal Housing Administration. Their credit score minimum requirement is actually 500. But with that, you have to pay 10% down as your down payment for the loan. The other is you can also have a 580 credit score and you'll pay about 3.5% down for the down payment of the loan. Next, we'll talk about the conventional loans. The conventional loans, they do have a stricter debt to income guidelines than the FHA loan. And they do require a credit minimum score of about 620. And contrary to popular belief, conventional loans do not only require 20% down, they do also offer lower percentages down for payments. And then there are other loans like the VA loan that doesn't have a minimum score requirement, but they do also have their own requirements, like you have to be a veteran or service member, and there are different requirements that come along with that. And then there are also the USDA loans. So if you're not a city person and you want to live out on a farm in a rural area, you do have that loan as an option. Definitely check those loans out, see the requirements, see what fits you best. And again, reach out to a lender. Talk to a lender. Let that lender know what your goals are, and they will definitely be able to assist you. So now we've talked about the different loans and their credit score requirements. I want to encourage you to now look at your own credit score. Go to annualcreditreport.com, where you're entitled to receive once a year your credit report from the three major bureaus, Experian, Equifax, and TransUnion. You want to take advantage of this. This is where you will realize your starting point with your credit. You will realize if you need to start working on your credit from now, if your goal is to get a home next year in August. Or you will realize you're at a good point and you can actually start calling a lender to get information about what loans you're eligible for. So take this as the first real step in taking on the home buying process. So let's say you went to annualcreditreport.com and you saw that your credit needs some work. Well, my suggestion to you is, what's your goal? What is your credit score goal? Do you want to be able to have excellent credit? Right now, your credit is good, but you want excellent credit. Do you have bad credit, but you want to move up to good credit? See where your number is. And then let's start making a goal to actually improve that number so that you can be ready for home ownership. So your goal is set. You want to have good credit, excellent credit, whatever it is. Here are some realistic steps that you can take to improve your credit. The first thing is pay your bills on time. If you have credit card debt, pay your bills on time. If you use your credit card regularly, pay them on time. Even if it's the minimum payment, make those payments on time, because on-time payment takes up 35% of your credit score. That's a huge number. Take that seriously. The next is aim to use less than 30% of your credit limit. Now, I know sometimes that's hard because it all depends on what your credit limit is on your credit cards, but that's the aim. Credit utilization also holds a part in your credit score. So try to use less than 30% of your credit limit. A next one is to dispute any credit report errors that you see on your credit report. See why you need to look at your credit report? You have to make sure there are no errors on there, no discrepancies on there, no inflated numbers or bills on there. So go ahead and dispute anything that you need or that you know is not correct on your credit report. So when do you want to start preparing your credit? Well, it depends on when do you want to start the home buying process. To give you a little insight, for me, I knew my why. Number one, I knew exactly why I wanted to buy a home. And I knew that I wanted to buy a home within 1 year. So what did I do? I went to the annualcreditreport.com. I saw that my credit needed some work. I gave myself 1 year to work and improve my credit, paying my bills on time, paying off any debt, disputing anything on my credit report. And after 1 year, I was able to improve my credit score to the number that I had in mind. So it all depends. Does your credit score need a lot of work? Does it need a little bit of work? When are you ready to buy a home? So I will recommend, based on your goal, based on when you want to buy a home, that's when you want to start. You want to give yourself 6 months, 12 months, 5 months, however long that you want to give yourself to improve your credit score. One of the main takeaways from me, though, is making sure that I had a consistent payment history with my credit, because that's exactly what the lender is looking for. They're looking to see, are you going to pay this bill back on time each and every month? That's the goal. So keep in mind that part of working on your credit is being consistent every single month. So remember, check your credit score. Give yourself a number that you want to reach with your credit score. Give yourself time to improve your credit score. Make those payments on time, dispute any discrepancies, and do what you need to do to improve that number. And another thing, don't be afraid of the number. Don't get scared. Don't feel intimidated. Just know that that's your starting point, and by the next time you're ready to buy your home, you'll be at a much better number. So, thank you for watching. Stay tuned for more. And please don't forget to like, comment, subscribe, and share this with someone you know can actually benefit from. I appreciate you for watching. See you next time. Bye.